A 150-year-old telecom company is trying to convince investors that the next growth story in mobile networks will not be just more towers, more radios, or more spectrum. It will be software. That company is Ericsson, and the pitch is straightforward. Operators have already spent billions building 5G networks. Now, Ericsson wants to help them get more capacity, better performance, and lower energy use from the equipment already in the field, using artificial intelligence inside the radio access network. For investors, that is the key tension. Ericsson is still a mature telecom equipment supplier, operating in a cyclical, competitive market. But it is also trying to reprice itself as a software, automation, private network, and AI infrastructure story. The question is not whether Ericsson matters. It does. The question is whether AI in the radio network becomes a profitable new layer of recurring revenue, or simply the next feature telecom vendors must provide to stay in the game. Today, we're looking at Ericsson's AI RAN push, its enterprise 5G strategy, the competitive threat from Nokia and NVIDIA, and what all of this could mean for Ericsson stock. Ericsson's story starts well before 5G, AI, or software subscriptions. The company was founded in Stockholm in 1876 by Lars Magnus Ericsson, originally as a small telegraph repair workshop. Over the following century and a half, it became one of the world's most important suppliers of communications infrastructure. Today, Ericsson is one of the three dominant global radio access network vendors, alongside Huawei and Nokia. It sells the radios, antennas, basebands, software, and network systems that allow mobile operators to connect phones, sensors, machines, and industrial sites. That position has become more strategically important as governments reassess dependence on Chinese telecom vendors. In markets where Huawei and ZTE face restrictions or political scrutiny, Ericsson benefits from being viewed as a trusted Western supplier. But investors are not rewarding Ericsson purely for being strategically important. They want growth, margin expansion, recurring revenue, and evidence that the company can participate in the AI infrastructure cycle in a meaningful way. That is where Ericsson's AI in RAN launch comes in. In June 2026, Ericsson rolled out AI in RAN as a software subscription designed to bring telco-grade AI models directly into 5G basebands and radios. The important part is that Ericsson says operators can use these capabilities without adding new hardware, because the software is built to run on Ericsson's existing RAN compute and radio platforms, while also supporting portability through Cloud RAN partner platforms. Ericsson.com. In plain English, Ericsson is telling mobile operators, you do not necessarily need a massive hardware refresh to make your network more intelligent. You can layer AI onto the network you already own. The software is meant to improve performance, automation, observability, and energy efficiency. Ericsson's product materials point to up to 20% improvement in throughput, 10% better spectral efficiency, and energy savings through AI-native link adaptation and sleep mode features. Ericsson.com. Those numbers matter because mobile operators are under constant pressure. Data traffic keeps growing. Consumers expect better performance. Enterprises want private, reliable connectivity, and energy costs remain a major operating expense. If AI can help an operator squeeze more out of the same spectrum and the same physical infrastructure, the business case becomes pretty compelling. This is not just a technical story. It is an economic story. Radio access networks have historically been hardware-heavy. Operators spend capital upfront, deploy equipment over long cycles, and then try to earn that investment back over years. For vendors like Ericsson, that can mean lumpy revenue, intense pricing pressure, and exposure to carrier capital expenditure cycles. A software subscription changes the conversation. If Ericsson can monetize its installed base with AI optimization software, it creates the possibility of more recurring revenue. It also gives the company a chance to defend margins with a layer that is harder to commoditize than hardware alone. That is the bull case. The bear case is that operators may see AI RAN as necessary, but not necessarily something they want to pay a premium for. Telecom customers are famously disciplined buyers. They will ask, does this software clearly reduce costs, increase capacity, defer capital spending, or create new revenue? If the answer is yes, Ericsson has a stronger growth narrative. If the answer is vague, AI in RAN risks becoming another feature in a competitive vendor checklist. There is early evidence that Ericsson's AI-native RAN work can deliver measurable gains. In May 2026, Ericsson and T-Mobile said they had moved AI-native scheduler and link adaptation software into large-scale commercial trials on live 5G advanced traffic, with trial results showing close to a 10% increase in spectral efficiency and up to a 15% boost in downlink throughput compared with legacy rule-based methods. That is important because live network trials are more persuasive than lab claims. But investors still need to see commercial adoption at scale, signed subscriptions, recurring revenue contribution, margin impact, and operator case studies that prove the return on investment. Ericsson is also trying to expand beyond traditional public carrier networks. One of the clearest examples is private 5G for industrial markets. In June 2026, Ericsson and Epiroc expanded their alliance to accelerate mining automation and digital transformation. Under the agreement, Epiroc will offer Ericsson's LTE and 5G connectivity solutions as part of its digital portfolio for surface and underground mines. Mining is a strong test case for private cellular networks. The environment is harsh. Connectivity has to be reliable. Latency matters, and the use cases are operationally meaningful. Remote-controlled equipment, autonomous operations, real-time analytics, asset monitoring, situational awareness, and collision avoidance. If private 5G works in mining, it can work in factories, ports, logistics hubs, utilities, and defense-adjacent industrial settings. This is the broader enterprise opportunity Ericsson is chasing. The company does not want to be only a supplier to telecom carriers. It wants to be part of the connectivity layer for industrial automation. That logic also helps explain Ericsson's 2022 acquisition of Vonage. Vonage gave Ericsson a cloud communications and API platform. The strategic idea is that telecom networks should become more programmable, allowing developers and enterprises to build services on top of network capabilities. The telecom API opportunity has been discussed for years, and turning it into material profit is not simple. But strategically, it fits Ericsson's effort to move up the stack, from radios and basebands towards software, automation, communications platforms, and enterprise services. Ericsson is also making physical moves that reinforce the innovation message. On June 12, 2026, Cushman & Wakefield announced that Ericsson would relocate its headquarters from Stockholm's Kista district to a new 1 million square foot site in Hagastaden. The firm described it as Sweden's largest office transaction to date and one of Europe's largest corporate relocations. For a company trying to attract AI, software, and advanced telecom talent, location matters. Hagastaden places Ericsson closer to Stockholm's research and health science ecosystem, including institutions such as Karolinska Institutet and Karolinska University Hospital. Now, investors should not overread a headquarters move. Real estate does not automatically create earnings growth, but it does signal how Ericsson wants to position itself. As an innovation company built around connectivity, AI-native networks, research collaboration, and long-cycle technology leadership. That long-cycle leadership includes 6G. In May 2026, Telstra and Ericsson signed a letter of intent to collaborate on 6G research and trials, including work on standards evolution and access to Ericsson's 6G testbed capabilities in Sweden. Telstra engineers are expected to test concepts at Ericsson's 6G testbed, while Ericsson teams will also work at Telstra's Innovation Center in Australia. 6G is not a near-term revenue driver. It is still years away from commercial scale. But the companies shaping standards, architectures, testbeds, and operator roadmaps today can influence procurement decisions later. And 6G may become more than a radio upgrade. It is being framed as AI native from the start, with sensing, automation, low-latency intelligence, and edge computing built more deeply into the network. That's also why NVIDIA has become such a fascinating competitive variable. In October 2025, NVIDIA announced a $1 billion equity investment in Nokia as part of a strategic partnership to accelerate AI RAN innovation and the transition from 5G Advanced to 6G. Nokia said it would develop 5G and 6G RAN software to run on NVIDIA's architecture, while NVIDIA framed the partnership as a move toward AI-native mobile networks. By 2026, Nokia was highlighting progress with NVIDIA-backed AI RAN work, including tests and demonstrations involving operators such as T-Mobile, Indosat, and SoftBank. Ericsson's current AI in RAN message emphasizes a lower disruption software path that can run on existing Ericsson infrastructure. Nokia's AI RAN narrative is more visibly tied to NVIDIA GPU acceleration and a broader AI computing platform. Neither approach is guaranteed to win outright. Operators may prefer Ericsson's model if it is cheaper, faster, more energy efficient, and easier to deploy. But they may lean toward GPU-accelerated architectures if those platforms can support more advanced AI workloads, external AI applications, or future 6G capabilities. For Ericsson investors, the NVIDIA question is not simply, will NVIDIA compete? Will NVIDIA expand the telecom AI ecosystem in a way that benefits all vendors? Or will it shift value away from incumbent telecom suppliers and toward AI silicon platforms? That answer is still uncertain. Meanwhile, Ericsson's stock debate is divided. As of the latest available market data, on June 13, 2026, Ericsson's U.S.-listed shares were trading around $12.28, with a market capitalization of roughly $40.9 billion. The bullish view is that Ericsson is underappreciated. It has a critical installed base, strong geopolitical relevance, deep telecom expertise, and a credible path to add software revenue on top of 5G infrastructure. The cautious view is that valuation already reflects a lot of improvement. Telecom equipment remains competitive. Operator spending cycles can be uneven. Huawei is still present in many markets. Nokia is becoming more interesting to AI investors, and NVIDIA's presence could change the rules of the game. There is also a policy dimension. Ericsson benefits when governments reduce exposure to Chinese telecom vendors. But Europe's approach is not uniform. Some countries have moved more aggressively against Huawei and ZTE. Others remain more cautious. Spain, for example, has resisted treating Huawei and ZTE as high-risk providers in the same way some other European countries have, highlighting how uneven the geopolitical opportunity can be across markets. At the same time, long-term connectivity demand remains real. The GSMA's 2026 Mobile Gender Gap work found that 1.5 billion women in low- and middle-income countries now use mobile internet, while 810 million women remain unconnected. The report also says women in those markets are still 12% less likely than men to use mobile internet. That matters because network expansion, affordability, rural coverage, and digital inclusion remain major policy and investment themes. The world still needs better mobile infrastructure. The question is who captures the economics of building and optimizing it. So what should investors watch from here? First, commercial adoption of AI in RAN. This is the central catalyst. If operators validate the promised gains in throughput, spectrum efficiency, energy savings, and automation, and if they pay for the software at scale, Ericsson's story changes. It becomes less about cyclical hardware and more about recurring network intelligence. Second, watch the Ericsson versus Nokia architecture debate. Ericsson is emphasizing AI software embedded into existing RAN platforms. Nokia is leaning into NVIDIA-supported AI RAN infrastructure. The winner may not be the most futuristic architecture. It may be the one operators can justify economically. Third, watch private 5G execution. Partnerships like Epiroc are important because they show Ericsson moving into enterprise and industrial connectivity. But partnership announcements are only the beginning. Investors need deployments, repeatable sales motions, and evidence that private networks can scale beyond bespoke projects. Fourth, watch NVIDIA. If NVIDIA remains a platform partner to the telecom ecosystem, Ericsson can coexist with that shift. If NVIDIA begins to absorb more of the value in future cell-site hardware, AI RAN compute, or 6G silicon, Ericsson may face a tougher margin and positioning challenge. Fifth, watch free cash flow. AI narratives can lift sentiment, but Ericsson ultimately has to prove that software, automation, APIs, and enterprise networks can improve financial performance. Here are 3 forward-looking scenarios. In the bullish scenario, Ericsson's AI and RAN gains strong operator traction. Carriers use it to increase capacity, lower energy costs, and delay some hardware spending. Subscription revenue grows, software margins improve, and private 5G adds a credible enterprise growth leg. In that world, investors may be willing to value Ericsson less like a slow telecom vendor and more like a strategic network software platform. In the middle scenario, AI and RAN becomes a useful product, but not a transformational one. Operators adopt it selectively. It helps Ericsson defend market share and margins, but does not dramatically change the growth profile. The stock then trades more on traditional drivers: carrier capex, regional contract wins, cost control, and cash flow. In the bearish scenario, operators hesitate to pay meaningful subscription fees. Nokia's NVIDIA-backed architecture gains momentum, and NVIDIA becomes a stronger force in future RAN compute. Ericsson's AI story then looks more defensive than offensive. In that case, valuation concerns could matter more, especially after a strong share price move. The balanced takeaway is this: Ericsson has a credible AI RAN strategy, but credibility is not the same as monetization. The company has real advantages: scale, trust, installed infrastructure, deep wireless expertise, and a growing software story. Its AI and RAN launch is strategically important because it tries to convert existing 5G networks into a recurring software opportunity. But investors should keep the bar high. The telecom industry has seen many promising technology cycles that did not immediately translate into vendor profit growth. AI native networking could be different, but the proof will come in operator adoption, pricing power, margin expansion, and cash flow. Ericsson is not just trying to sell smarter networks. It is trying to sell investors on a smarter business model. And over the next few quarters, the market will be watching closely to see whether AI in the RAN becomes a real earnings catalyst, or simply the next cost of staying relevant in global telecom infrastructure. This discussion is for informational purposes only and is not investment advice. Stock prices, valuation estimates, competitive conditions, and market expectations can change quickly.